Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're gonna go through Twitter, see what people are sharing on social media, like I normally do. It'll be related to three different topics generally: wealth building, commodities, and/or financial topics. And just as a reminder, we do have a 5 p.m. Mountain Standard Time question and answer session for members today, which is Sunday. So see you there if you're a member. If you're not a member and you want to ask me whatever questions about the commodity bull market that's coming, you can sign up, use the word discount in the coupon code, and let's dive in here and see what people are sharing. Um, you can find me at finding_finance, and you can join our community, finding-value.com. So the first one is, every time small caps got stopped at this point for the past 2 years, the market imploded. And that's looking at this chart from a pessimistic viewpoint. And you can look at this maybe from a couple of different viewpoints. Some of the things that I look at, and this chart's not an easy looking chart. I'm not saying that it's not, but it's obviously been pretty strong resistance where these blue circles are at. It was support and it was resistance. We busted through it, came back, and to me, it looks like we've got a little shoulder that is inverted that's developing on the very short term basis where we could potentially move higher. Another thing that I look at when I look at these is I look to see what the lows are doing. Low, higher low, higher low. We had a little bit of a blowout here, but that could be a false breakout slingshot that breaks us through the resistance line. And then you usually get a retest when you break out. And this here could be the retest. So when you take a pessimistic view and you look at this chart, you're like, well, every time we hit this, it crashes back down until it doesn't. Until it doesn't. And one thing that changed is we punched through the ceiling of resistance. We also did it, if you were to kind of draw a trend line through here, we did it through that slingshot. I call it the slingshot cheetah, but it's a slingshot where you yank it down and it pushes it back through that resistance line. And then generally you come back and give it a high five, you tag it. And this has another inverted head and shoulders that's developing in the short term. I think it looks like it wants to go higher. That's me. And I try to look at these things from an unbiased viewpoint, where it's like, show me the data. Show me that this thing's ready to break through a resistance level. Show me that it's being used as support. Show me the short-term patterns, because this is taking it from a little bit longer viewpoint, not quite a decade or anything like that, but 5-year viewpoint or so. And then you want to dive in. You want to go from a big viewpoint, a long time frame, dive in, dive in, dive in, and dive in to get your entry point. And this is probably a good entry point. That's what I would say. Everyone waiting for the lags to hit employment. Meanwhile, the housing market is taking off and still understaffed. The Fed doesn't usually affect just any jobs, they affect construction jobs. And they keep going higher because of asset prices and the housing shortage. And here, just as everyone predicted, when mortgage rates went all the way to 8%, U.S. residential construction employment is now at the highest level since the Great Recession and remains up more than 100,000 since COVID. And this is the shape of the construction job growth. And I know some people are like, why do you keep showing the housing market? Guys, this is so important to understand. It is a big part of how I am successful at choosing some of the companies and sectors that I'm choosing. If this continues to go up like it is, more than likely we're not going to get a quote recession on a nominal term. It's not going to be a deleveraging event where unemployment skyrockets and all this other stuff from the housing market. Generally speaking, when housing starts remain above the average housing starts, when it's above average, and I don't have that picture or that graph up here, but as long as we're growing and it's above average, that's generally a very good sign, and that we're not in a bad shape in the economy in terms of real estate and employment from real estate, and that's a big driver of going into a recession. Now, I'm not stating that we can't get a recession. We need the market to rebalance itself, and more than likely, you guys probably are feeling it in your checkbooks, just like everyone else and myself. Is there's probably going to be a reshuffling of jobs in the market. It may You might see job losses in tech, and they might be hiring in other sectors that are needed or are not as susceptible to the wants of what people want, and transfer more to what people need or what government is spending on. Either one. This looks pretty resilient. It looks really good, and it's another indicator of robustness in certain sectors of the economy, important sectors at that too. Most have been wrong at big turns. Think about what that really means. Must ignore all those media and talking head narratives. Need the right tools and experience to play a bull right, plus charts and emotional control. And again, he's got a breakout here of gold and a potential retest, and we're still above that support level. I completely agree. It's just a matter of time, guys. You have to wait for the market conditions to swing in favor of gold. That's all it is. As we call the major lows, the lows of the services here. Coming on down. For so far, 2024 is the year of disruption for the shipping sector. Join these guys for that. And I'll talk about shipping tomorrow. I've got, in my opinion, a really good pick. There's probably a few picks. I already own them. But one of them looks real good to take off. Well, I should say a few of them look really good to take off, and some of them have already taken off. So shipping does look really good, and that is tankers and also dry bulk. Those are the two that I like. M2 money supply. The cool thing here that I like, and I'll have to zoom this in a little bit. There we go. He's got the trend line here, this little yellow trend line going up. Look at the trend line gap that he's got between the trend line and where we are today. And look at this thing start to turn up in the right-hand side over here. And remember, this is M2 money supply. We had a big, huge, so this was kind of, if you drew a trend line here, it's not as steep as the one he's got drawn in. It'd go this way. Then it's steepening even more, and then you can steepen it even more here. You can see we broke that steeper trend line in 2022. We've gone sideways, and now we're starting to turn back up again for M2 money supply. Kaboom in February. So this is URNM versus the SPUT. This is the Sprott Physical Uranium Trust. One thing I like here, I like my big bullish engulfings. I like my big bullish engulfings right there, right on support too. So I think it looks good to go higher. I agree with this. I approve this message. Way to go, John, the Hinster. XLE, big bullish engulfing candlestick. I'm glad other people are noticing. I think this is generally a good spot to be looking and a potential move higher. I'm just looking to see if we got any other bullish engulfings. We have one almost there, but it's not quite a bullish. Oh, here's one. There's one right here too, another bullish engulfing at the bottom there that went up. And we're going to try again and try to break that big resistance level up there. I think we're going to have a good shot of breaking it because where we're positioned today in relationship to summer, we're going to probably get a pretty good drive out of here to the upside. Tesla will fall another 30%, warns JP Morgan. JP Morgan sees Tesla dropping another 30%, says falling profits don't support high valuation. And I just pulled up the chart. I was like, okay, let me look at Tesla. I don't look at Tesla that much. So here's the breakout. The big breakout occurred back here. We can zoom in on this. So that's the big breakout. That's what you want to see, guys. If you want to make a lot of money, you want to see kind of a resistance level that breaks. So you get up here. Sometimes they break. I'll draw it like this here. So you kind of get a lot of sideways motion. You break out. Sometimes it goes sideways even more. I would have guessed it would have broken out here, but it came back and did a slingshot. gets everybody on the wrong side. People start to short it because it broke through that support, and then it slings it the other way. Looking at it recently, this is a very, very big move. Bam, here's one location stopping point sideways, and then bam. So think of this, the way that I think of this is your accumulation zone is like here. All right, and I'll just kind of draw it. This is kind of like your accumulation zone. So you accumulate in here. That's your 1, 2, 3, 4, 5, and then 6, 7. This is your accumulation zone that you accumulate under. It's called the Livermore accumulation cylinder. Then it launches. It launches and you get a stopping point. So that's point 7's here, point 8 is here. It goes like this, and then point 9, and this is the peak. Then you come on down, it comes back up, and guys, this could get ugly here. This could get ugly. um, Generally, you don't. I would not be looking at this. We've got a trend line that's broken. This is a big bearish engulfing candlestick. We've got big red army showing up on this side here. Sell, 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 distribution, distribution. A little bit of a move higher, most likely a flag pattern that's breaking to the downside. I I don't like the way this looks, and 30% would be generous if that's all it goes to the downside. That's my opinion. I don't like it for a long. Bubbles. The current U.S. 10-year real rates are not high enough to burst the AI bubble, but it could burst if they reach 2.5%, is what he's got. Here's some bubbles. We got the Bitcoin bubble. Someone was asking me about Bitcoin and it being in a bubble. Anything can be in a bubble, and even if something stays around for a while, it doesn't mean that it wasn't in a bubble. A bubble is more or less just a very huge overvaluation period. Gold was in a bubble at some point because it was overvalued against other assets. The bubble is determined by the relative valuation to other assets. We are in no doubt in a bubble in AI and in a lot of the technology stocks. How do I know that? It's based off of the um, valuations that are being given to these companies. They're not sustainable. You can't be at a price to earnings ratio of 100 or 75 even and hold that valuation when you've got a monster market cap, which means basically that you have to grow absolutely massively to maintain your current valuation. I just wouldn't make that bet. I think that we are in some of these companies are in bubbles for sure. Here's Berkshire Hathaway. So Berkshire Hathaway breaking out to new all-time highs this week. You know what chart that looks like, guys? I hate to say it, but it looks like the home builders chart. It's the same home builders chart set up on a shorter time frame. Actually, I'm going to bring that up just to show you guys. So let me yank this up, show you the home builders on Leonard Corp. It's the same chart in my opinion. So this right here, they're showing the stock like right there. Look at how this comes and forms. It's the same chart here. It's like a carbon copy and it's breaking up. So that almost looks exactly like Leonard Corp that's continuing higher there. I just thought that was interesting. U.S. businesses hold debt equivalent to about 75% of GDP. Current conditions are worse than even 2008 peak. Well, you could look at this from another perspective, though. And I'm not saying I'm right here, but this is business debt to GDP. You can draw. You know what? I'm gonna copy this, and I'll just show you guys what I see because this is what I see, and I'm not saying that I'm right. We'll pull up some paint here. Let's draw some lines. So what I see is I see like a resistance line that goes through here, where you hit your head, your lows are coming up, you break out, you do a retest. Now, what I see today is something very similar where you draw a line across. Oh, look at this. And then you break out again, and then you do a retest, and then you're going to go higher. So I think business debt to GDP ratio could still go up, and that we're kind of going between these valuation channels higher and higher and higher and higher. That's the way that I see it. Am I right? I don't know. We'll see. The refiners are the stocks that look the best in the oil and gas space. So this is oil refiners and ETF, crack. They crack spreads. Now, this looks pretty ridiculous. It is a cup and handle. The projected move of the cup and handles from the bottom of the cup to the top of the cup, projected on the top of it. What this is saying is that we're going to get a big move in gasoline prices and diesel prices and probably oil prices. um, Actually, it's very ridiculous. This is a gigantic pattern. This is one that we can look at for our members is the oil refining companies, and I'll look and I'll scavenge to see what most of those um, companies look like and share them with you guys if you're interested, which I'm sure you are. December pending home sales plus 8.3% month over month versus plus 2% estimated in the prior month. So best month since June 2020 in terms of percent of pending home sales. So December up 8.3%. Looks like we've broken the downtrend, boys. Here's ROST Ross stores also breaking to the upside. Quite surprising, but I'm just looking around, looking at different charts that are breaking large resistance areas to the upside and sharing. Emerging market stocks. Emerging market stocks have fallen to their lowest level against U.S. equities in more than 50 years. That is an opportunity, boys. That is a major opportunity. Do opposite of everyone else. If you bought it down here in the 60s, you made the absolute killing if you sold it anywhere in the late 80s to 90s. You made a monster move of this. Let's hope that something like that could continue out in the future. Is the bet you're making the one on the bottom isn't going to follow the one on the top? So the financials making 52-week highs. Then we've got the bottom, the Russell 2000. It's going to go up, guys. We're going up. It's going up. You break the downtrend line, you do a little bit of a return move, and then you move. And the financials are doing it too. And the reason I think that is because we're in the middle of an expansion of real estate, and you get all those construction jobs and employment jobs and et cetera, et cetera, et cetera. We're going higher, I think. And liquidity is coming into the system. Liquidity, the housing market, home sales up, 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 up. There we go. This one is inflationary. A pop in year over year retail sales, ex autos tends to guide producer prices for finished goods on essentially a coincident basis. That producer price index figure is still minus 0.1% year over year through December. Remember that the Red Sea Gulf of Aden attacks will soon arrive in the data soon. So, yeah, I think this is probably going to head higher. Retail sales, ex autos. I think we've got inflation coming, guys. Liquidity's coming to the system. Real estate market is strong. I think we're going to be going higher. Oil's probably going to trend higher. You'll probably see platinum go up. You're going to see a lot of these inflation sensitive assets start to go up. And here's that liquidity cycle I'm talking about, or liquidity index, I should say. The recurring 65-month cycle of global liquidity suggests stocks could be poised to benefit from increased liquidity in 2024. And that's liquidity index, and we've got a big move higher that we could have in 2024, 2025, and maybe it peaks late 25 or I don't know, wherever it's going to peak at. Scrolling down, anyone think energy deserves a turn? I do. Crude oil futures right at resistance, coming up out of that resistance area. And maybe we get into a fly zone and we start flying higher. I have seen this fractal before, guys. I've showed you this one a lot. It's the same as previous bull markets, first leg, second, and then a potential big move. And this here is first wave, third wave. Well, this is one big first wave, and then we'll get a big third wave. Global oil demand. Look at this. This is crazy. This data is from OPEC. The lows were at 91. In 2020 it was 101. In 2019 it was 100. 2025, their initial kind of estimate is 106.2. This current estimate of 2024 is 104.4. We are moving a lot higher than the current 2023 estimate of 102.1. So we're going up in oil demand, boys. At least that's the estimates. The NASDAQ valuation has disconnected from real rates. Generally, we've got U.S. real rates inverted. Generally, when they invert them, these two quite closely. We could see that I think real rates will remain strong. I think we're going to see a move lower in the NASDAQ. That's my guess. Yes. I've never seen gold stocks as cheap as today's gold prices as they are right now. So gold equities, highly undervalued. We've got gold price, and then we've got the GDX Gold Miners ETF and this big divergence. Some people think that GDX is going to go up and meet it, and gold's going to move higher as well, where that would end up with a large outperformance of GDX. Let me know what your guys' opinions are on this. I know some people are pretty burnt out on the gold and silver mining index, but that's generally when it bottoms. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. If you guys want to jump on the question and answer call at 5 p.m. Mountain Time, you can do that. That's just a reminder. And we'll catch you guys later. This is Finding Value.